The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the minus 354 Dow right now at 22,524. What a couple of days we've had. Shouldn't say a couple of days. Look, if you're looking at the left side of my chart, we had 1, 2, 3, 4, 5, 6 or 7 big red candles, or at least strong red candles to the downside. Yesterday's fantastic over 1,000 point rally took us to where? Wow, 1,000 point rally. This is like 4 times in history as the market had. The Dow had this kind of percentage move. One of the times happens to be when, I'm almost sure it was, when Roosevelt had that bank holiday, and then he opened up the banks. The market was closed for a couple of weeks, opened up the banks, and it had a whopper of a rally. I think it was 15, 16%, and that stood for a long time. Now, what we do have, and this is going to be very interesting, is the high of yesterday, 23,878, was in fact just about the opening Friday. So you get Friday, 500-600 point move down. Monday looked like it was going to be good. No, it gaps down, 500-600 points down, goes to 21,720, actually 22, I think it was. And then yesterday has a gap up rally, pulls back sharply, takes out the low by just 10 points. But no. Let me correct that. 21,792. I knew there was a 2 involved there. 21,792 on Monday. Tuesday, of course, is Christmas holiday. Wednesday, we come back and we go up, then down sharply, and you go 80 points low to 21,712, and then start a rally that kind of picked up a little steam. It kind of picked up a little more steam, and then had the biggest short squeeze you could ever imagine, plus people deciding, hey, this is a great time to be doing some buying, and the market closes, Dow closes up over 1,000 points at 23,878. That's 2,000 points. Look, 23,878, and the low on the day was 21,712. It's over 2,000 points higher. Okay? So, wait a minute, how could that be? If you go down to the low, because, wait a minute, let me just figure this one out. 21,712 to the high of 22,878. Oh, of course, I put a 3 in by mistake. I wonder what on earth was going on. 1,000 points, 1,100 points higher than the low of the day. Ooh, that was silly. 22,878. But now look where we are. We've pulled back some. Now, what I normally do, because yesterday I had a Chapman Wave trend gauge reading, a very low reading, which always implies with a 96% accuracy rate that there should be weakness in the Dow before a rally is attempted. Well, we certainly got weakness, right? Down over 400 points intraday. This is going to be very, very important, because if there is a closing high above the high of 22,878 over the next few days, that's going to suggest that the technicals in the weekly will improve just enough to allow for a more concerted move to the upside. 23,000 is the 9-period exponential moving average in the daily. 23,373 is the 14-period exponential moving average in the daily. I just don't think that's going to be possible in a very short period of time. We might be able to do it over a week and a half, That's just my thinking right now, just based on the flatness of the MACD and the stochastic and the daily and the really ugly weekly and monthly technicals. So here we go. Dow must hold today's low of 22,350. A close under that today says, uh-oh, watch out. The rallies are going to be quite pathetic, and most of them will fail. S&P right now, so the Dow is down 1.61. The S&P is down 1%. Dow is 1.66% at minus 24.26. It too made a lower low yesterday by going to 2345.58. I love when they have that sequence. Remember the other day the Dow was 23456? 23456. Now what we're looking at is the S&P has to try to climb over the next, I would say by Wednesday or Thursday, a week from today. It has to climb about 2467.76. If it does that, that's very good. That's going to be real tough to do with a flat stochastic at 10% and the MACD not so good. It's going to take some kind of a spark to be able to do it. A couple of questions coming in the den and emails. So let me just go to this quickly. You got the QQQ, which is down 2.37%, down a bigger percentage move. It's at 148.86. Yesterday made a low that did not take out the Friday low, and no, the Monday low at 143.46, and it screamed up to 152.54, trading right now at 148.84. It's going to be real tough. Whoops. Let me just get this down here. I'm not sure who's calling. And most importantly, stretch. What we're looking at in the Qs is the weekly technicals are really very ugly, and so are the monthly. So it's going to take a miracle on and I've seen this happen in June into markets. It's unusual to do it this late in the year, but I've seen the last couple of days of a lousy candle in the monthlies change to pretty good, sometimes very good, but it's going to have to take a move into the 1155 area by Monday. You got 2.5 days to do it. No. Okay, well, what we're looking at right now is that the Qs are down 361 and 148.86. IWM is trading, so that was down minus 2.36%. This is down 1.5%. One of the better readings in the indexes, but one of the lousiest chart formations. The weekly, the monthly are just horrible. They're in sell. It's been in sell mode for quite a while. Russell 2000 at 130.00, down at $1.95, down 1.47%. Made a trough D. Nice bounce. Nah. The most important thing is that 137.48 is the 200-period exponential moving average in the weekly chart. It's going to take a lot to get there. All right, that's it. Now we're going to go to gold. Gold is up 6.8. This is a good move in gold. It's testing the outer boundary of the up channel in the weekly chart. It's at a leg F doji candle. If there's no new recovery high today above yesterday's high of, this is a continuous contract of 1282.3. NACD is good. Stochastic is at 84%. All of that is good. It says that you've got a major support at 1258 in the 1250s, and it's trading right now at 1280.2. And silver finally broke to the upside. This is really important. It is at 15.32. I like that. 15.47 is the next target. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Quickly, I had a question about this. Yes, the H pattern. Well, the H pattern then went to a U pattern, and now it's a double U pattern in the E-mini 2-minute chart. Just worth noting that it double topped. The high early this morning, just after the open, was at about 24.45. Pulls back, not too bad, down to 24.10. Oh, 35 points. That's bad. And then it rallies back up in the H pattern. Sorry, in the cup pattern, and now it's making a right. It's like a deep handle, like a double U. This U is coming up from a higher base. So this is important because if it starts to stall, any close at 24.31 right now, 24.32, any close on a 2-minute basis that holds for 3 bars at 6 minutes, about 24.40 says, yep, probably going to test the 245 area, but if 2445 area, and if there is a takeout of 24.23, it could quite easily go down very quickly to 24.20. But most importantly, the RTYH, the Russell 2000 2-minute futures shows you the rectangle formation and can last a lot longer than your patience, just trading between the boundaries of about 13, I'd say 13, call it 13.17, 13.18, and 13.05 for a long period of time here. A break above either of those levels would be a positive on the upside and a negative on the downside. All right, let's get back to our story because we wanted to look at, I was just in the break, I usually get questions. I try to answer them in the den, just between COG and MRC. So COG is Cabot Oil and Gas. Gosh, this used to be such a winner years ago. Cabot Oil and Gas. Look at that. 2013, it's gone from 2009 in the single digits, around about 5 or 6. Scurries up to $40, just over $40, and then comes plummeting down to the 200-period moving average in the monthly RRC. So that was Cabot Oil and Gas Corporation. Range Resources, same thing. I remember this, everyone talking about it. Screams from the 38 area up into the 90s in 2014, and then comes tumbling down to 14-ish. Tries to rally up to 43 in 2016, And all it's done all year for the last 2 years is go to lower lows and a low low right now at 992. It's not a great looking chart. What was the other one? MRO? Was that MRO? Just let me check here. Yep, MRO is a much better chart formation. Marathon oil, I believe. Yep, Marathon oil. It's in the monthly chart. It's gone A, B, C. Is that a D? D? No. That's. Let me just double check here. 1928. 1952. Yep. So that's A, B, C, D, E, F goes to a G, and then comes tumbling down. It goes all the way from the lows of the 6s up into the 24s. Now it's trading at 13.81. It's a better looking chart, but I don't see it unless it can establish a base in the daily chart. Yeah, it's a nice move yesterday. These short covering rallies, they tend to peter out quite quickly. All I'm saying is that at 13.80, down 37 cents today, down 2.61%, after a spectacular day yesterday with a low of 12.57 and a high of 14.18. That's like about a 4-day trading range in one day. If it establishes a base and it doesn't break under 1330 to 1370 right now, doesn't close below 1330, and it can hold you for a couple of days, hey, there could be a bit of a rally. So this is, I think on chart formation, MRO is one that I like a little bit better out of the three. So I'm going to make a note of those, and I'll follow them as we move along. So now I wanted to look at gold. To just tell you that gold, the weekly chart has finally seen the stochastic at 83% and the MACD strong. The monthly chart still looks very poor, but you know that you need dailies to help the weeklies and the weeklies to help the monthlies. So this is really good. The question I had in the den is, would I be getting close to shorting now that we've got a potential? Let's treat this as Technical Friday, although it's Thursday. You see this candle right here, what I call a long-legged candle? I have a technique that I've used I wouldn't say 100%, but I've used it pretty well for a long time. When I see that candle, if there's an inside bar afterwards, within 2 bars, if there is a close sharply above the wick, the long wick on the upside, in this case 1282.3, if there is a close within 2 days above it, it says you're establishing a base with the low that was made of 1267.40, and it should travel up a little further if there is a close within 2 days above that wick of the long-legged doji. That's what I usually look at. If there is a close below, there are other connotations that I don't want to go into right now. If there is a close below, actually, I'll tell you right now. If there is a close above within 2 days, the little tiny candle right there, the body of the candle, that's why it's called the doji. It opens and closes at about the same price. Looks like a plus sign. That becomes support, and that support would be at around about 1274. That's if there's a close above, and it's a support that should hold for a little bit. If there is a drop and a close within 2 sessions below the wick low at 1267.40, expect that body of the candle at 1274 is going to be strong resistance, and be prepared that it could start to go lower to one of the important either troughs, removing averages below, which would be 1264. Okay, so just make it real simple. But silver has actually finally improved enough for me to say, wow, what a candle. Silver with a very strong MACD, very strong stochastic at 80% in the daily, I should say a good stochastic, but an improving MACD and stochastic in the weekly. Monthly chart is actually a little bit better technically than gold is, even though the price is not. This is a continuous silver contract. I like it, and I'm just going to say to you, if in the next 3 sessions today, including today, Friday, and Monday, if there is a close in silver above 15.40, the 15.47 200-period exponential moving average becomes a magnet for the first time in, let's do the squeeze. Squeeze once, twice, 3. Since silver broke down back in June the 15th, it went from 17.618, wow, and down to 6.8 618.03. Oh, look at all those 618s there. Yeah, and that's the first time once it broke that, it never got close. This is the first time it's getting close to the 200-period moving average. Usually, at a certain point, it becomes a magnet. So I think I've done that, and that. Now let's go to just high-grade copper quickly. High-grade copper, I've got a lot of questions coming in. Horrible action. Wood, which is what we always look at. This is the iShares Global Timber and Forestry ETF. Horrible chart. HGX, which should have been running with the yields dropping like this. HGX is trading at, that's the Philadelphia housing sector. Big move yesterday, holding not too bad. It's at 236. It went to 227? 227.69 yesterday after making a high earlier this year in January of 369. I mean, if ever there was a whopper of a decline, home builders, that's it. All right, folks, watch out. I think we're about to pull back. Yep, there it is. Watch this carefully. E-minis, the Russell 2000 is pulling back with the E-mini.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, a bunch of questions about natural gas. MG, I've got the continuous contract. If anyone actually trades it, they usually need a lot more than just a continuous contract, but that's fine with me. I don't trade it. I just look at it to analyze. And right now, it's down 0.014 at 3.44. So a couple of questions came in. Could I do an analysis of it? This is D, that's E, and this is an F/C, and I guess that'll be F There we go. I just did some Chapman wave analysis on it, so give me a second. Now, what's the question? Question is, hi, Basil. Been waiting to get in natural gas. I was thinking about waiting when it gets close to 3. I would agree with you that that's about the level that I'd be looking at it. It's trading is trying to form a base here on the 200-period moving average. 3.33 is the support. It made a low yesterday of, I think it was 3.252. Hit a high of, had a really a big move percentage-wise to 355. Right now it's at 3.44. My weekly chart suggests that there could be more chopping, chop, with slightly lower highs and slightly lower lows, but the 310 to 3 area is kind of where that's where I'd be looking at it. This is the time of the year that I would have expected that it would have held much better. Natural gas, continuous contract. All I can say is that the stochastic is acting as if it needs to pull back one more time. Let me just look at the 120-minute chart. Yeah, it's looking more like an arch formation. I'm going to suggest if you waited this long, you want to start thinking of it in 3 parcels. One is if you're a more an intermediate term buyer, you want it when it's starting to push back up. And if it can clear the 3.60s, which shouldn't be such a big deal, but if it can clear the 360s, then 3.76, 3.64 is the 9-period moving average, 3.76 is the daily 14-period moving average, but it's really the 200-period moving average in the weekly chart that you want to see it approach. At least it's got to get close, because if it can get even into the 364s, it suggests that at some point over the coming 6 weeks, you could, after that, you could get very close to the 200-period moving average. As it stands right now, I just don't know the percentages here on what happens if it goes a penny. I just don't know how it trades in terms of money. What increment is 5 cents or 25 cents or 1 cent increment or what it is. So I'm just going to say I would begin a little nibble at about 3:30. If it bounces from here, tomorrow I'll have to do another analysis. My eye says that there's a chance, based on the stochastic and the MACD, that there'll be one little slip under the 200-period moving average in the daily, which is at 333. If it pulls back under that, I'd start, as long as it holds for one day above the low that was made yesterday of 3.252, but it goes under the 3.338. This is fine tuning. I would say that's where I would just nibble a little bit on natural gas. Then I would hold off, because if it rallies nicely, I'd be thinking of adding. So I'm saying there's positioning that I would do. But if it holds a little bit and then it pulls, it mustn't go straight down. If it can hold for a couple of days and then have another stair-step move to the downside towards the 320 area, let's email me and we'll look, cell phone me or whatever it is. We'll look at it again. But I wouldn't get carried away. I'd rather be buying strength than weakness. I don't see the strength yet, but I do see some base that's trying to form. So let's look at it that way. Next question, Greg wants to know what? What? Yeah, what? WATT, 864 right now, up 4.13. Energist core. What does Greg say? Greg always has some very interesting things. Could you look at the stock for me? I do have a small position a little further down, and normally with a spike of this magnitude, I would sell. But if you look at the weekly chart, it is a bullish engulfing. And look at the movement that happened last December. The news is that one of their products has been approved by the FCC. Thanks, Greg. So, Greg, this trades by appointment. It's got 1,500,000. So it's not the volume of shares. When I say by appointment, I mean appointment to move to the upside, because all it's done in the weekly chart from the 20s, it hasn't closed above the 9-period moving average. This will be the first week if it's able to close above 782. That's what I mean by about appointment. An appointment to go long. That's what I meant to say. So I'm just going to say to you, I agree with you with this particular spike. The day's young. It's at 890 right now, 892, 893. Somebody's listening to us. up 4.36, up 94, what, 94%? Yeah, it's up 94%. Greg, I know that you're very disciplined. I do not under any circumstance want to change your thinking. But what I am going to say is that I would take a little profit off right now. I wouldn't maybe take the full whatever dollars it is that you bought it at, if you bought it way, way lower a long time ago. But I would definitely take something off because there are three things that are going on. One is it's very rare for this to have a spike. Number two is that there is an approval, doesn't mean that it immediately goes on the market to sell. It means now they've got to productize it. They have to turn it into a commodity that sells. So I'm just going to say to you, at 896 right now, just, you don't have to listen to me. What I would do is I would take a little bit off because I want part of my thinking here to be money management. It's trading under $5 yesterday. It's trading at $4.70. It closes at $4.58. It's trading exactly double right now. So I'm just going to say to you, you want my opinion? I'm saying to you, take a little bit off. It's not a big deal, but I definitely would let it ride a little bit longer. I would also scale out of it. If this thing drops under 820 and then suddenly you're looking at 780, I would take a little bit more off. Why? Because it's saying to me that it has to go through this digestive phase. But right now, you've got a fantastic profit. You don't have to listen to me. I would take something off. Money management, that's all. It's nice to put in your pocket. Next question I had was, then a couple of big statements here. Question about DB. You know, I looked at DB last night, Deutsche Bank, and I'm saying to myself, this is a great opportunity at $8.18, having been at $7 and about 70 cents earlier in the day yesterday. Take something off. Just get out of this position. It is not good, Deutsche Bank. I mean, I don't know what's going to happen to it. Yeah, they can say they'll prop it up. Whatever bank amalgamates with this, both banks are in trouble. This is not good. There is really bad news. It's now trading underneath. It's at 768. Not good. And the question was, it was a statement, Deutsche Bank and Goldman Sachs. I didn't read the statement. I just see the symbols. Goldman Sachs is also going through a terrible time. Made a low yesterday of 151 or 2. 151.70, spirals up to 163.11, a 12-point move, an 8 to 9% move. Now it's down 276 at 160.17. This monthly chart is just not good. This is bad news, and I agree with people who say this is not good for the market. No, I'll be right back. Basil.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So there are a couple of things. There are themes that I'll be talking about and I'll be working out with my subscribers to my opening call. We really have a big cash position. We don't have to rush to put it to work because bargains are coming up all the time and better bargains the next day. So I don't think we need to rush, number one. Number two is, look at this, GWPH. This is GW Pharmaceuticals, PLC. This is medical marijuana. I think it's headquartered in Great Britain. I loved it earlier in the year. It went from the hundreds to the 100 and almost 80 level. It's trading right now at 91. I mean, this is cut in half. So, and I spoke about this the other day. You remember I had an email saying, what about certain sectors? And the one was the gaming. And I said, the one that I'm looking at that I want to see it become more mature is the MJ, which is the marijuana ETF. This is the alternative, what is it called? Harvest ETF. This is cannabis products, etc. And I'm waiting for that to mature with more, big pharmaceuticals, the tobacco companies, whatever it is that starts to go into them to make them more mature financially, as well as starting to make profits. I know a couple of stores opened up here in Massachusetts. Wow. I mean, in 2 weeks, one of them cleared, two of them in 2 weeks cleared 5 million or something, or in a couple of days. It's going to be big. There's no question about it, but it's early. And the JBK, am I guessing JBK? Let me just see if that's correct. Have I? Oh, no, JBK is something completely, BKJ. I don't want to guess right now. But Bank of New Jersey, also not a good chart. All right, I can't remember it right now. But that other ETF, the gaming one, I said, let's BJK. Did I do everything else but BJK? Yep, I did. So it's B is for gaming, I guess. It's a B, not a G. All right, look at that. It goes from 50. Earlier in the year, it was down the 35s. It rallies up to the 50 area. Now it's trading at 32. We need a little patience. These are going to be on the scorecard for sure. And just right now, they're out of my, I just don't want to be looking at them. So quick question here. Boeing, could I do my usual Boeing look? Boeing is down. Look at that monthly chart. That is ugly, and I've been talking about it for ages. So tomorrow is Technical Friday. I will deal with the bigger picture. But there's absolutely no question that unless a miracle happens by Monday's close, the 31st, the last day of the year, some of these charts are going to, not some, in fact, I would say pretty much all the charts, and the Dow was the last one. That candle that we had for most of December up until yesterday still looks pretty bad, but this candle is suggesting that there's no way that I can call this anything but a peak F. And if that's a peak F top in a monthly chart, it takes time, and you've got the conflagration coming up with the Democrats and the Republicans. Oh man, this is going to be, if you think it was ugly in 2018, I don't even know what it's going to be like. So you want to be climbing a wall of worry, but you won't do that until you get the VIX index. I don't even think the 50s is it. It might have to be more than the 50s, but 50 was that big screaming to the top back in February, the scare of the higher yields, etc. Now we got the yields pulling back because the market's pulling back so much. The VIX index, I think we have to wait. We're going to get one whopper of a sell-off coming up from maybe a higher level. I don't know, but you'll see that VIX really start to climb. I'd like it to pull back from the 32 area right now over the next 2-3 weeks, maybe get down to 24, 26 to 24, even 22, and have some kind of a decent rally. I think the market deserves it. General public deserves it. SLX, yep, I spoke about this yesterday, the steel sector. Look at that monthly chart. That's going to take a while to repair. Look at that weekly chart. Look at this. Oh, it's trading at 34 and it hit 51.92 just in May. You know, these are big percentage pullbacks. A U.S. index's worst month since October of 2008. But there is a completely different circumstance. In 2008, we were getting towards the last third of the sell-off that started. Look, when you're looking at the general markets, that sell-off that occurred right here. Let me just pull this back. Right there, the high that was made back in 2000. Oh, okay, 2008, are we? Right there. That was October of 2007. Look, when we made. Sorry, folks. There's just I put my roller on and I'm just rolling along. Stop. So from October, remember I talked about October and March, October and March, October and March. October was the high of 2007. March was the low. Remember, we bought the exact low on the 6th of March in the DIA. What was it? We bought it at 65.50, I think it was. Something like that. Anyway, so that kind of consistency says to me that that was already, let's go to 2009. Yeah, that was more than a third of the way. 2008, yeah, there's that ugly candle. So we're looking at more than a half of the way through of the sell signal. But look at this. Look at the move down in the monthly chart. Look how many days. This is what I thought we would have this year going into the big sell-off, that it wouldn't be 1 month of just horrible selling. I should have guessed that that's really what we could get. But I thought we would have something more like this, and we'd take time and a stair-step move. We're doing this all in one thrust, and it's not done yet. That's the way I'm looking at it. So here comes the next question. Where was it? Let's see. Okay, Wayne wants to know. Basil, long-time subscriber, would you be adding long-term money here, or are you confident we will have another shot at or below this point? I'm 75% cash in long-term holdings. Wayne, first of all, congratulations. And I've had a number of emails from subscribers saying thank you for getting us into that cash position. You know, it's really nice to be not having this bogey sitting on top of you, this thing saying, where, I told you. And now look what you got. You got a 20% decline in your money's. I prefer to have the cash, and we're missing opportunities. It's way better to miss opportunities because you always have opportunities, but cash you don't always have if you lose it. So I'm pleased to say that, yes, that you've got your cash. I'm going to make suggestions over the coming week. I'm going to be putting out certain charts that I'm looking at where I think it would be appropriate to have a starter position, realizing they could still drop another 7 or 8%, but coming down 20 or even 30 or 50% in some stocks, starting positions here doesn't mean that because you're buying them at this point, you're risking 8%. They can drop 30% from here. So I'm going to have to be as careful as possible. But in terms of the low and everything like that, it's the entrance of the stocks that we really like. For instance, the XLF is still on my list for 2019. as something that should have a really good rally percentage terms, but can it break into the 31 area above the 30.33 all-time high back in January? Wow, to go from 22 to 33, that's 11 points. That's a 50%. I mean, we're talking about 50% gain. So it's going to be time, and it's going to have to be spectacular. So let's just have patience. I'll be back.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're looking at UPS down $1.30. So it goes from the 135 level to 90. I would call that a little bit of a drop. But wait a minute. What about Federal Express? I mean, Federal Express, another very important economic barometer, another important, even though they've made some mistakes, I guess, in takeovers and things like that, it goes from 270s down to the 150s. I mean, these are phenomenal numbers. This is a bit, Federal Express, you look at that and you say, wow, what a bear market this must have, the market must have just, all the indices must be down 22 to 35%. Huh? This is not good. So I'm putting this to you. I'm saying have patience. And if you really like certain stocks that have dropped significantly, you could treat them as trades initially. You could just start a position. You put in your stop. I like to make them real tight because if you're right, you're right. It should move right away. And you could raise your stop and they can keep the stop and say, whatever happens, that's my stop. I'm prepared to lose, but wow, there could be a nice gain. It could go from the daily to the weekly to the monthly. But in the meantime, back at the ranch, I'm just saying to you, there are stocks that are starting to become, I'm finding them more attractive just in terms of trades, but in terms of longer term positions, look at UTX. I mean, one of my favorites, trading down, goes from 144 to 100, a 44-point drop. Look at that monthly chart, peak E. It's going to take a while to repair the damage. So I'm taking this very seriously. So I wanted to just get that out. And I also wanted to say, within the context of the different sectors, what's really important over this particular period, we're going to find which sectors are holding well, which stocks within sectors. Treat it like a sieve. You know how you put grains and stuff in, you shake it up. Anything that falls is too small. In this case, anything that falls down is something that you didn't want to hold. Anything that's holding nicely in that container says, I'm holding support. Think of it that way. Don't be in a rush. There's plenty of time. You want to do trading. Trading's fine. But the longer term positions, you're going to have terrific buys coming up. Have patience. Stay tuned for Steve. Stay tuned for Dave. I think Dave's still away. And then, of course, Tom O'Brien. I'll be back with Tom later on. Have a good day. I hope to see you a little later. Otherwise, I'll see you tomorrow. Same time, same station. Thank you for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.